European shares edge higher after last week's software sell-off. Financials drove European markets higher on Monday morning after a volatile couple of weeks when investors have been looking for companies whose business model could be most at risk from AI. Software, data analytics and even financial services companies themselves came under fire last week. Anna MacDonald is an investment manager at Aubrey Capital Management. Anna, it's another busy week of earnings. What have we learned thus far in the earnings season?
Well, if we're looking at the US, 3/4 of companies have announced so far, and 3/4 of them did slightly beat expectations. So Q4 2025 is turning out to have been a strong quarter. That's been really boosted by the returns from the Mag 7 in particular. And astonishingly, according to FactSet, if you were to take out NVIDIA's performance contribution to the tech sector, it would take earnings growth in the tech sector from just over 30% to 23%. So showing how the fantastic margins enjoyed by some of those Mag 7 stocks have really contributed to earnings growth.
Do you think that sell-off last week was overdone?
Well, what we are seeing now is huge investments into AI spend. So these big companies have committed around $600 billion plus in spending for just this year ahead. Now, previously, investors have perhaps been more relaxed because they know this is coming out of company cash flow. But this is going to use up a lot of their company's cash flows this year. And so investors are thinking about now, when am I going to see the returns on this investment? And so I think there are concerns around that. The other really interesting area is the sectors which could be affected by AI that you've already mentioned. And we've seen some quite, perhaps some quite random, but some quite understandable sell-offs as well in a wide variety of sectors that could be impacted by AI developments.
What do you make of how the market was picking and choosing the so-called losers from AI over the last couple of weeks? Are investors right to be selling sectors like software and data analytics?
Remember, these stocks have been very strong in the run-up to this. They are normally rewarded for being asset-like companies with delivering consistent earnings growth and margin accretion. And in the past, actually, they've been quite well rewarded for their own development of AI. And investors thought that, together with these data sets, would give them some good economic moats. And so therefore, these companies did trade on quite high valuations. Now, I think there's just a layer of uncertainty about all this. It's difficult to pick the winners, and it's difficult to pick those that will be immune. And so I think investors are starting to shoot first and ask questions later. And what we've certainly seen is that asset light is no longer particularly a wonderful thing for a company to be. We've seen these asset heavy companies actually doing very well. It's hard to imagine how AI can do anything to upset a miner of lithium, perhaps, or an industrials company or a defense company. They might be able to help the cost base, in fact, and help the development. But these are big companies with factories and things that need to be made and need to be done. So I think those kind of companies seem a bit more of a safe haven for some of those investors at the moment, and they're still probably trading on slightly more attractive valuations. So investors are looking for tangible assets at the moment, I think.
Financial services and asset managers themselves also saw a sell-off. Should the industry be worried that an AI agent can manage your portfolio?
Yes, I mean, I think that AI is able to assist you, but I think companies that still have trustworthy brands should be able to use these tools to help deliver good outcomes for clients. I think it's like many of these. It's the business model feels uncertain, the pricing feels uncertain. So to some extent, perhaps it will put margin pressure on some of these financial services firms. But if it's well managed by that firm, it could actually be something that will differentiate that firm from others. So I think it's going to be about building brand and credibility. And I think for many of us who are looking at our own portfolios or thinking about our tax liabilities, things like that, it's very important to make sure that's right. And some of these tools, whilst they are initially very impressive, I think there's quite some way to go before someone really transitions fully towards that. I mean, I think we all know, despite the fact that it's very easy to change bank accounts. I think it's actually been shown that you're more likely to get divorced than change your bank account. So I think some revenues are pretty sticky.
That was Anna MacDonald of Aubrey Capital Management. Don't forget you can watch more videos on Reuters.com.